Well, good morning or good afternoon, everyone, depending on what part of the country you are joining us from. Welcome to our 61st webinar in our COVID series and our first webinar for 2022. We're really excited to have the Canada Revenue Agency with us today, and we know that many of you are very excited about this webinar too, because we have a record-breaking number of registrations. I think we have close to 3,000 registered, so we're expecting that as we know, more people are joining now as I'm speaking, but we're going to have well over 1,000 on today's webinar. And so my name is Laura Jones. I am the Executive Vice President for the Canadian Federation of Independent Business, and that's really a fancy way of saying that I wear a lot of different hats. I just have a couple of housekeeping notes before we get going. One is that we will be providing for you the links that are referenced in today's webinar, as well as a recording of the webinar. However, typically we also provide a copy of the webinar deck. You will not be getting a webinar deck for this one. And the reason that you won't be getting a webinar deck is that the links are being constantly updated. And so we don't want to provide you with static information when that information is changing. So you will be getting the links, you will be getting a copy of the recording, but we don't have a PDF of the deck this time. And I mention that because for our regulars, you know that we usually do provide you with a deck. And so with that, I think we will move to the next slide. And Corinne is with me today, and she'll be joining in a minute to go over some basic information and then introduce CRA. And we also have our business counselors, some of our business counselors on the call today, Jocelyn and Rachel, who will be working to answer your questions. One other quick housekeeping note is with over 1,000 of you on today's webinar, as you know, we like to answer as many of your questions as possible, and we're not going to be able to answer all of the questions today because we know that from past experience, we'll have hundreds and hundreds of questions. We've got some of the ones that were put to us in advance. We will be getting to those, but don't worry if you have questions. Of course, we will be trying to get to them in one way or another. And as you know, we use your questions to update our website with our FAQs. And we also will be hosting another webinar next week that will be one of our regular CFIB webinars. So Corinne and I will be back for our regular program next week, and we'll be filtering through those questions. So the things that we can't answer today, we will be trying to answer, but we won't be able to get to every single question today. We'll get to as many as we can. So I'll keep us moving. Let's go to the next slide. We typically like to start these webinars, as our regulars know, with a couple of quotes of inspiration, and kind of like the last one here, when you're at the end of your rope, tie a knot and hold on. We know from the survey that we have out with our members this week that many of you are really feeling this last this fifth wave in a big way, and so hope is a bit of the theme for these quotes. And with that, we'll just get to, as I said, the agenda. Corinne's going to run us through a few new things that happened just before the holiday. There were some changes, some big changes, some things we've been lobbying for. So she's going to just run you through those very quickly, and then we'll get to the main show, which is CRA. So with that, I will invite Corinne to turn on her camera and quickly run us through some changes.
Thanks, Laura, and hello, everybody. Welcome back and Happy New Year. I know it's a bit late in the year already, but it's our first webinar. I thought I would do that. Couple things we just wanted to update you quickly, and then we'll get straight to the CRA. The first is some potential changes to the local lockdown benefit. So this was one of the benefits that the government had introduced prior to the holidays. They made some updates to it also right before the Christmas holidays. And they are currently proposing to temporarily expand what they call the local lockdown benefit to allow those businesses who face not just full closures, but up to 50% of their business being closed to be able to apply for wage and rent subsidies. You're going to have a 25% minimum revenue loss to get a 25% subsidy. That goes to a maximum of 75%, so it's incremental. If you have a 30% wage loss, you get a 30% subsidy. It is supposed to be in effect for periods 24 and 25, which run from December 19th to February 12th. However, because this was proposed just prior to the Christmas holidays, and it does require some regulatory changes Those changes have not yet been made. And so this particular program is not yet open for applications. And the CRA, I will not be talking about it as much today, of course, because it's not something that they have in front of them at this point. They have to wait for those regulatory changes to take place before they can be able to offer it. But just in a nutshell, it's going to operate very similar to the Tourism and Hospitality Recovery Program, but it is open to all businesses that fit the criteria of being by public health order closed by at least 50%. And have a minimum revenue loss of 25%. So we'll talk more about this next week if you have questions about it. But I wanted to make sure that you were aware of this coming, and we're hopeful by next week, maybe those regulatory changes will have been made. So we'll have more to share once we do. Right now, it is still a proposal. If we go to the next slide, the other quick thing I wanted to mention is that also very recently, government announced that for the Canada Emergency Business Account loan, that's the loans of $40,000 or $60,000 that you may have received. They have extended the repayment period. So it was supposed to be paid back by the end of 2022 in order to receive the forgivable portion. They've agreed to now extend that to the end of 2023. So we now have until the end of December 31st, 2023 to pay back the CEBA loan and still get the forgivable portion, which is $20,000 if you have a loan of $60,000. So that's great news. It gives you more time to repay and get the forgivable portion. However, we know things are still tough. We wanted to make you aware that we're still pushing for many things, including expanding that particular CEBA loan to $80,000 and increasing the amount forgivable, given how much debt businesses are continuing to have to face and absorb throughout this pandemic. We know new businesses are still being left out. And of course, we'd like to see rent and wage subsidies available to all businesses on a sliding scale as a percent of their revenue loss. And because the new programs at this point, we feel are not necessarily addressing every businesses that are in a pretty dire situation. However, we are going to talk today with CRA about what is available, and for those of you that can maybe access those programs, how it's all going to work. If any of these make sense to you and you want to join us in the type of fight we have, we certainly encourage you to sign our petition up on our website, and the link is right there, which we will be sending to you after this particular webinar. So that's it for now. We'll be happy to talk about all of these a lot more next week. But without further ado, I think we will move it over now to our colleagues over at CRA. I'd like to introduce to you, we're very honored to have with us today the Parliamentary Secretary to the Minister of National Revenue, Lebouthillier, Peter Fragiskatos. Over to you, Peter, and then on to the CRA.
Well, good afternoon, Corinne. Thank you very much for inviting me. Thank you very much for the work that CFIB has put forward from the very beginning of the pandemic. Before I was appointed in December, I served on the Federal Finance Committee, and we heard a number of times from the CFIB, and a number of recommendations, in fact, that were put forward by CFIB were incorporated into federal policy. Something that I was very happy to see. Great to be here, as I say, for this question and answer session on the Tourism and Hospitality Recovery Program and the Hardest Hit Business Recovery Program. Depuis le début de la pandémie de COVID-19, excusez-moi, notre gouvernement a été là pour les entreprises et organisations canadiennes afin de leur fournir le soutien dont elles avaient besoin pour rester en santé et en sécurité et pour rester à flot. In fact, since the beginning of the pandemic, the Government of Canada has provided more than $100 billion in support of Canadian businesses and organizations, and is continuing to invest in these organizations through targeted supports like the THRP and HHBRP. I want to acknowledge that this has been a challenging time for businesses, both owners and employees. In many ways, we are recovering, and high vaccination rates across Canada are something to be encouraged, or offering encouragement. In other ways, the changing regulations for businesses, especially in light of the new Omicron variant, have caused uncertainty and worry. I can tell you that here in London, there's ongoing concerns for sure. We are seeing the business sector prove resilient, though. A number of businesses that have come through our office, our constituency office, it's really, the number is overwhelming. It's just been a pleasure, but also something, it's been a challenge to work with business owners over the past well, since the beginning of the pandemic, because you come across their everyday concerns, their worries, their anxieties, but the resiliency of entrepreneurs and their employees is something that definitely has left an impression on me and our staff here in London at the constituency office. I believe that the government's new targeted supports, the THRP and HHBRP, will ensure that our most affected sectors have the urgent help they need to deal with the ongoing impact of the pandemic, while also ensuring that public health authorities can enact necessary restrictions. Au nom de la ministre du Revenu national, je tiens à souligner que notre priorité immédiate est de continuer à soutenir les Canadiennes et entreprises canadiennes touchées par la COVID-19, en plus de veiller à ce que l'Agence de Revenu Canada offre des services faciles d'accès et faciles à comprendre. In her new mandate letter, Minister Lebouthillier is tasked with taking bold, concrete action to build a healthier, more resilient future. I believe that this critical collaboration between stakeholders like yourselves, our government, and the Canada Revenue Agency will allow the most efficient delivery of these critical supports. C'est pourquoi je suis heureux que l'Agence tienne cette importante séance de questions et réponses aujourd'hui. Nous savons tous qu'une reprise économique complète pour le Canada comprend les reprises de tous vos secteurs qui ont été parmi les plus touchés. Et je suis certain que vous aimerez connaître comment ces nouvelles mesures de soutien s'appliquent à vous. I'm sure that the CRA's presentation highlighting available web resources, the eligibility tool, and the calculators, as well as the Q&A session, will support you in these challenging times. In closing, this government will continue to help Canadians through the pandemic. It is a solemn responsibility that we've lived up to, and we're going to continue to do that and ensure that Canada's economic recovery leaves no one behind. Thank you very much, merci, and thanks again to the CFIB for the great work through the pandemic, the ongoing work, and certainly to entrepreneurs and their workers. Enormous thank you, as I say. The resiliency is truly beyond impressive, and it's something that needs to be appreciated and acknowledged. Thank you very much.
Thank you. Thank you, Peter. Thank you for those words. And of course, we will now turn it over to our colleagues at the CRA. Starting us off will be David O'Horan. He's a Senior Policy Analyst, Corporate Income Tax Legislative Amendments. And I'm going to turn it over to you, David, to take it from here.
So thank you, Corinne and Laura, and thanks to everyone for joining us today. As mentioned, my name is David O'Horan, and I am a Senior Policy Analyst in the Legislative Policy and Regulatory Affairs branch at the Canada Revenue Agency. Before I start, if you don't mind going to the next slide, I would like to remind everyone that the key objective of the measures put into place by the federal government to respond to COVID-19 is to reflect the immediate needs of Canadians and support the post-crisis economic recovery. As such, there may be updates to the measures after this session is held. The CRA would like to remind everyone that any potential changes may affect the accuracy of the information shared during this session, and that the questions gathered during this session will be considered by the CRA in its ongoing communication efforts. You can find the most up-to-date information in Canada's COVID-19 Economic Response Plan. The CRA is proud to continue administering the COVID-19 supports on behalf of the Government of Canada. Since the beginning of the pandemic, we have delivered supports to Canadians, businesses, and organizations through a variety of emergency programs. The government's targeted COVID-19 support measures will ensure that the hardest hit sectors and those who are adversely affected by restrictions due to COVID-19 continue to receive the support they need. These measures will continue to prioritize job creation and strong economic recovery. The government has implemented changes to support programs intended to aid Canadian businesses and organizations. So first of all, the subsidy rate for the Canada Recovery Hiring Program will be extended until May 7th, 2022. This program for eligible employers with a revenue drop above 10% will increase its subsidy rate to 50%. This extension will help organizations continue to hire back workers and to create the additional jobs Canada needs for a full recovery. Secondly, the government introduced targeted supports for organizations that are still facing significant pandemic-related challenges. These targeted supports opened for period 22 on December 21st, 2021. The Tourism and Hospitality Recovery Program provides support through wage and rent subsidies to, for example, hotels, tour operators, travel agencies, and restaurants with a subsidy rate of up to 75%, provided that they have experienced an average revenue reduction of at least 40% over the first 13 qualifying periods for the Canada Emergency Wage Subsidy and a current month revenue decline of at least 40%. As part of the Tourism and Hospitality Recovery Program, the local lockdown program provides support to eligible organizations who are subject to a qualifying public health restriction at the same subsidy rates. The hardest hit business recovery program provides support through the wage and rent subsidy programs. This program will support other businesses that have faced deep losses with a subsidy rate of up to 50%, provided that they have experienced an average revenue reduction of 50% over the first 13 qualifying periods and a current month revenue decline of at least 50%. The final measure to support Canadian organizations is an increase to the monthly cap on eligible rent expenses that can be claimed from $300,000 to $1 million. The CRA remains committed to supporting all Canadian businesses, just as we have from the beginning of this pandemic, by putting people at the center of everything we do. I'd now like to turn the floor over to my colleague, Gary Graves, who will speak to you in more detail about these measures. Thank you.
Good afternoon, and thank you, David. My name is Gary Graves, and I'm an acting manager in the Assessment, Benefit, and Service branch at the Canada Revenue Agency. I would like to reiterate that the CRA is proud to administer these new and extended programs on behalf of the Government of Canada. Our top priority is to continue to ensure the program application processes are simple and clear, and that subsidy payments get to Canadian businesses as quickly as possible. Therefore, to support these new measures, we are pleased to let you know that we have launched new calculators on the CRA's web pages. Alongside the calculators, we have provided detailed information on how each of these programs will work and who will be able to apply. The calculators will also include printable statement features that organizations can use to view their claim at a glance and enter required information into the application forms easily. Organizations that have been using CRA calculators to apply for previous subsidies, like the Canada Emergency Wage Subsidy and Canada's Emergency Rent Subsidy, will find the new calculators follow a familiar format. And additionally, I want to highlight a new helpful new feature, the interactive eligibility tool, which will help organizations determine which emergency supports they may qualify for. This tool includes a filterable list of eligible activities that qualify as tourism and hospitality sectors. Organizations can review and filter the list of qualifying activities to see if they fall into this definition. And similar to the Canada Emergency Wage Subsidy, eligible organizations will be able to apply for these emergency supports online using CRA's My Business account or represent a client. I strongly encourage anyone who is interested in applying for these new programs to visit the CRA web pages and take a few minutes to run through the calculators and eligibility tool. Although you may not qualify for one subsidy, you may qualify for another, so do give these resources a try. And while we've made a great deal of information about these subsidies available on our website, I acknowledge that there will be circumstances where organizations need to speak to the CRA to get some clarification. At any time during the application process, whether it is before, during, or after, organizations can contact our dedicated business inquiries line by calling our toll-free number 1-800-959-5525. The business inquiries line is open Monday to Friday from 8 a.m. to 8 p.m. local time, and Saturday from 9 a.m. to 5 p.m. local time. And now I will hand the presentation over to my colleague, Caroline Bellini, to introduce CRA's web content and resources for the recovery programs. Thank you.
Thank you, Gary. My name is Caroline Bellany, and I'm a lead product manager in the Public Affairs branch at the Canada Revenue Agency. First, I'd like to direct your attention to the wage and rent subsidies landing page. So this summarizes the new and existing programs and is helpful to understand the supports available. Remember, the new programs are available for both wage and rent. So from here, you would select a wage or rent option and then get more detailed information. As previously mentioned, the CRA has designed an online eligibility tool to help you determine which supports you may be eligible for. All you need to do is answer a few questions, and the eligibility tool will provide you with a summary of which programs to apply for based on your answers. We also have created a filterable list to help applicants find which activities are considered eligible to apply for the Tourism and Hospitality Recovery Program. This list allows you to filter a keyword and provides categories and examples of what is included and excluded. You can use the eligibility tool or find more information on the relevant wage or rent on who can apply web pages. The CRA has also created new calculators to assist you. So there's one calculator for calculating wage support and another for calculating rent support. Again, if you have used one of our calculators before, these will look and feel very much the same. There are two new eligibility steps in each of the calculators. Step 2 is a calculation of your 12-month average revenue decline. This is an eligibility requirement for the THRP and the HHBRP, and it only needs to be calculated once. You can download and save this information for your records, and you will need to demonstrate 40% decline in revenue to apply for THRP in addition to having qualifying activities. For the HHBRP, a 50% revenue decline is needed to be eligible. Please note, for the THRP and the HHBRP, you will need to calculate both a 12-month average revenue decline and a current month revenue decline. The calculators will take you through calculating both of those revenue declines. The second way to qualify for the THRP was introduced as the local lockdown program. It is available to eligible organizations regardless of sector. To qualify for the THRP this way, you must meet the following two conditions. First, you are affected by a qualifying public health restriction, and second, you have a claim period revenue drop of at least 40%. Please visit the THRP web pages to find out what a qualifying public health restriction is. Step 3 asks you to confirm that you meet the definition of a qualifying tourism or hospitality entity, which I just spoke about, or that you were subject to a qualifying health restriction. Remember that you can use the filterable list, which is linked in step 3, or look to the Who Can Apply web pages for eligibility information. Once you've navigated your way through the calculator, you'll see a summary of your amounts and which program to apply for during that claim period based on your answers. The summary gives you the corresponding line numbers, which you will use in your application form. This step is not new and has been included in all of our past calculators. As my colleague mentioned, for the wage and hiring support calculations, you still have the option to download the spreadsheet instead of using the online calculator, but please note that the spreadsheet is not available for the RAD calculator. Finally, we've heard feedback from users that people are sometimes unsure what to do once they finish the step. So once you've completed your calculation using the calculator, you can save or print your amounts, and then you will need to log into My Business account to fill out your application. The relevant forms will be under Payroll for wage and hiring applications and under COVID-19 rent subsidies for the rent applications. And now I will pass the floor back to our moderators, Corinne and Laura. Thank you very much.
Well, thank you so much for that. And we have lots of questions coming in. So we also had some questions in advance. So maybe we'll start with those. And then I would just encourage David, you and your team, if there's any that you want to answer that you've seen come in, please feel free to add those as well. But I thought I'd start with one from Hardeep, who had asked in advance about the Canada Recovery Hiring Program. Can they hire a family member or new employees? What are the eligibility requirements and have they changed? So I wonder if you could just review that quickly for Hardeep.
So the Canada Recovery Hiring Program, or CRHP, eligibility requirements remain the same. They haven't changed. The program has simply been extended and the rate has been increased to 50%. With respect to family members, the way that the program rules work for the CRHP is that family members or other like non-arm's length employees, you'd be limited by the amount of like baseline remuneration, commonly referred to as pre-pandemic pay. So if you didn't previously employ that employee, they wouldn't be included in the calculation. And the overall effect, because the way the CRHP works, there is you need to establish your base period remuneration, which is the period 14, if I'm not mistaken, but hopefully somebody can confirm that for me. But you need to establish your base period remuneration and compare that against your current period remuneration. I just had a colleague confirm that yes, it is period 14 for the base period remuneration. The overall effect, though, is that the amount would be the same in both the base period and the current period for a non-arm's length employee. So it wouldn't actually have any effect on the calculation.
Okay, so hopefully, Hardeep, that answers the question. Of course, the helpline number for CRA was also put up there, and our counselors are also available if you need more help. And I think we can put that in the chat function, those numbers again for our team. Corinne, I saw you were in the middle of typing an answer to a question that got a lot of upvotes, and it's really not a question for CRA. I think it's a question for CFIB, because this is lobbying, and of course CRA is administering the program, but they're not the ones who are deciding at a political level what the parameters will be. So I'm going to ask it live in front of the whole group because it got 20 votes, which is by far the most. And by the way, it's very helpful for us if you upvote everyone, because there's so many questions that helps us answer them. So the question is, does it make sense? This is Angelo's question. Does it make sense for the government to continue to use the revenue drops, declines? Sorry, the questions are coming in so fast and furious that it just went to the bottom of my, hang on a second. Okay, does it make sense for the government to continue to use a drop in revenue to qualify? Our revenue is around 90% of pre-COVID, but costs have gone up considerably. And we saw this big time on our survey this week. Members are very concerned about inflation and cost increases. So we're losing more money than ever before, and we don't qualify for help. So Corinne, I'm guessing you want to just say something about our lobbying there.
Yes, I was trying to answer, but it kept getting disappearing on me. So I will say we're increasingly hearing this from our members. So this is something that's very high on our radar. As Laura said, our surveys are also telling us that the rising prices is the biggest thing affecting businesses right now. And so while CRA at this point can't do much about this piece of it, we as an organization are certainly raising it as a central theme of a lot of our discussions with government right now. And the fact is it'll be a central focus of our recommendations going forward on how to help businesses out of the pandemic, as well as we have to help them address the dealing with rising prices, whether that's through subsidies or other means in terms of taxation, or making sure government doesn't increase further the cost of doing business. These are all measures that we're pushing for at the moment to sort of try to find ways to make this a little bit easier for businesses, given the dramatic increase we're seeing in costs right across the board, whether it's labor, supplies, shipping, all of these things, insurance, all of these things have been going up quite tremendously. So I did want to just touch on that, but make sure that you all know that is very much something that we're consumed with right now, and we'll push forward with government. But we should probably get back to the questions for CRA and make sure we get the most out of them. Do you mind if I ask the next question, Laura?
Go for it.
Okay, so one of the big issues, David and team, has been, of course, newer businesses that have really struggled to access any of these. And so Trevor and Brooke are asking, is there any relief for new businesses? They opened in 2020. They're not eligible in the first lockdown. Payroll for 2019, of course, is required, which they didn't have. Are they eligible now? And so is there anything in there that you can provide some feedback to them on?
So I think the first point that I'd make, what constitutes new is relative, but I think the answer is likely to be no, especially in this particular situation. All the programs share the same basic eligibility requirements. And being in business before March 1st, 2020 is a key aspect of the program designs. So if you didn't start your business before March 1st, 2020, you wouldn't be eligible for the new programs nor the CRHP because you can't demonstrate the necessary revenue drops pre-pandemic to current. The policy considerations of why this is a key aspect of the program rules may be more of a question for Finance Canada, though.
Yes, so it is on our radar as well. And for all of our members out there who are in the same category, which are now coming up to 2 years for many of you, this is something we continue to lobby for strongly. And of course, we have the petition I talked about earlier that includes making sure we open up some of these programs. However, there may be some other options for folks, not through the wage and rent subsidy. So we encourage you to contact our business advisors. You may have some other options for you. However, they are limited in scope compared to some of the obviously business subsidies that are out there for businesses that have been around longer. So hopefully more to come on that in the future.
I just wanted to get a clarification because you said March 1st, and I think, is that the correct date, or is it March 15th, 2020 for the wage subsidy?
So there's a bit of a distinction there, right? You have to, when we're talking about the wage subsidy, you have to have a payroll account as of March 15th, 2020. But when we're talking about making the necessary revenue comparisons, the latest possible period for revenue comparison is like the entirety of February 2020, right? So the alternate, there's both like the general year-over-year approach where you're comparing, you're comparing your current period revenues against, the same pre-pandemic month, and then the alternate approach is that you're actually taking the average of the revenues that you earned in January and February. But if you, like, the ultimate conclusion there, though, is that if you only began business, after February 2020, you wouldn't actually be able to make any comparison to those prior periods.
Thanks for the clarification.
And again, that's something we continue to advocate on. There are a couple of others that have been upvoted quite a bit, and I know they're a little bit off topic, but they're very relevant and top of mind for business owners. So David, maybe if you can't answer, maybe you could give us a sense of when, who or when, and then Corinne and I can update, but it's on the T4s. So Angela is asking, Angela is asking when the updated T4 slips will be coming up. And then Tanya has a more specific questions that relates to boxes 57 through 60 and a rumor that's been heard. And both of those are getting a lot of votes. So I'm just wondering if you have any intelligence to add there.
I'd actually defer to my colleagues in collection and verification branch, just because these are, these are T4 payroll related issues, and that's their area of subject matter expertise. So I'm not sure if thank you.
That's fine. Corinne and I will follow up, and we'll see if we can get, for those of you on the webinar, we'll add this to our FAQs on the website, and we will see if we can get an answer for you next week, because that was getting a lot of votes. So we hear you that's something that you want answered.
So I do believe there is a colleague on the line, though, if they are available to speak to this point.
Yes. Hi, my name is Eleanor. I could speak to this point. We have confirmed that the codes for boxes 57 to 60 will not be in use for 2021. They were in use for 2020 only, and they will not be needed for 2021. As for updated T4s being available, stay tuned. I don't have that information yet.
Okay, so just to confirm, box 57 to 60, you don't have to worry about it this year. It's done. I just wanted to confirm that was what you were saying.
Yes, that's exactly right.
Perfect. Thank you.
Perfect. We can put that rumor to rest, and then I'm assuming we'll hear fairly soon when the T4s are the new T4 forms are available.
So I did want to ask John another question that came in beforehand from Lynn about what part, if any, of the subsidy is subject to tax?
So I think the simple answer to that is that all of it is taxable, right? So any amounts received under these subsidies is considered government assistance and is taxable unless you're exempt from tax. And you have to report these amounts, in your income tax or information return, for the relevant tax year or fiscal period, as the case may be. The one other thing I can share on that, because I think it might not be as straightforward as as one might think at first glance, but in terms of determining the relevant tax year or fiscal period, an amount of subsidy is generally considered to have been received on the last day of the claim period that it relates to, rather than the day that the entity receives, the check or direct deposit.
Great, thank you.
And David, were there any you were seeing that you wanted to answer, or we can keep doing the rapid fire, going back and forth between the questions that we got in before and the ones that are being uploaded?
I'm okay with this approach. And I think, I've only looked at the very top of those upvoted, and I'm sure you're going to get around to them anyways. So.
Yeah, I was going to ask John's question next, because that has 13 votes for it, and it's the companies that pay dividends will not qualify for any help. Any context you can provide around that?
So this was a this was introduced as a last-minute change to the enacting legislation, so I guess the first thing to mention, or the important thing to mention, is that these provisions that would limit access to the subsidies and or require repayment of the subsidies are intended for public companies and subsidiaries of public companies. So if John is not operating a public company or a subsidiary of a public company, I would think that it wouldn't apply in his particular situation. The other thing, unfortunately, because because the changes are relatively new and came out of the finance committee changes to the actual bill, the CRA is still in the process of determining how we are going to administer these changes. So what I would suggest is that people continually monitor the CRA webpage for any additional information.
Okay, and we will be watching closely for that. Our members are not publicly traded companies, so I'm assuming John is not publicly traded, so that there may be some good news there, but it sounds like there's a little bit of a caveat there, that there's still a little bit of uncertainty in terms of how your CRA is planning on administering these rules. Many small businesses do pay themselves in dividends, so we hope that you will take that into consideration as you're considering your administration. Thanks for the question, John.
So if I can actually just jump in on that particular point too, just to head off, I guess, any future questions in the regard. It's important to note that the programs that the CRA does administer on behalf of the government, like the wage and rent support programs, I think John had mentioned that, he hasn't taken salary in some time and has paid himself through dividends. John would not be considered an eligible employee for the purposes of any wage support, right? And that would be the case, that's the case with respect to any remuneration in the forms of dividends, right? So right. I did just want to put that.
Thank you for that clarification, because I had heard it differently. So thank you for that. Corinne, there's one more I wanted to put in from the list of advanced questions before I go back to you. Who do you contact when downloadable Excel spreadsheets from CRA don't work? So David, what's your advice when sometimes there are glitches in the spreadsheets, and we know you guys are working really quickly to get this information up quickly, but what's your advice on if you find something that doesn't work?
So right off the top of my head, calling business inquiries would be you know, your best course of action. But I do want to you know, provide Gary, my colleague in Assessment Benefit and Service Branch, an opportunity to respond to here. You might have a little bit more additional context.
Gary, any additional contacts you'd like to provide there?
Yeah, I think contacting business inquiries is probably the way to go, unless Carolyn, you have any other suggestions. I don't know if there's a feedback loop on the web pages themselves, but definitely alerting CRA to any issues is I think key.
Thanks, Gary. There is a feedback widget on most of our pages, so you can definitely pop in some feedback there. We do look at that daily, but business inquiries we work very closely with, so you're welcome to contact them as well. It'll all come back to us.
Okay, great. So that's 2 avenues through CRA, and of course you can always call us, and we're in regular contact with CRA as well, and so we're providing that feedback too.
Okay, so next questions I wanted to ask about, some of them came in before, and having been able to go through all 100 and something questions on there, but I'm sure there's a few in there related to this, but it has to do with how to figure out whether your business is eligible under one program or the other program, because sometimes there is some gray areas. For example, we had one question from Jung, who asked about like retail shops in a tourism area. Do they apply under the the tourism and hospitality grant, or are they supposed to apply under the hardest hit sector, given they're considered retail, but they basically rely on the tourism industry and they're in a tourism town? So how do businesses who feel like they're in this gray area, what should they do to sort of figure out which one to apply for?
So I do think the simple answer to that is to engage with all of the web content that we have put up with respect to the the wage and hiring supports and the rent and property expense supports, like the eligibility tool, the calculator, and any of the subsidiary calculators involved really do a good job of kind of getting straight to the point of the eligibility considerations. Like the eligibility tool actually is a series of questions that when you go through them, you might have a clearer idea. Certainly in terms of eligibility. So there's a lot to unpack, I think, overall with the question. I'll do my best here. I think it's probably fair to say that the THRP, so the Tourism and Hospitality Recovery Program, is more narrow in terms of its target group, and maybe the eligibility requirements are a little more stricter, notwithstanding that the revenue thresholds for the THRP are lower, right? They're having at least 40%, whereas for the hardest hit business recovery program, the threshold is 50%. Revenue drops both on like the 12-month average side of things and the your current period amount. But I think really the going through and going through the tools the CRA has provided, I think is probably the best option available, because I can't without considering the specifics of a particular entity's situations, I really can't I can't say for certain that the entity should be applying for one over the other. So specifically to the, to the participant's question though, the one thing that I would want to mention, I think it was mentioned that they're operating a retail store in a tourism area, let's say for like sake of example, Niagara Falls. The eligibility for THRP isn't determined based on, like there's no like designated tourist areas. It's not based on geographic location, right? It's based on the actual activities that you performed, pre-pandemic. So I'd assume that we'll probably get into that in a future question. So maybe I'll hold off on going right down that line. And then the last comment that I would make, just in terms of the, which program should I apply for? Going through the eligibility tool will give you a good sense of what you may be eligible for versus not eligible for. And then actually, putting everything into the calculator will give you a very clear indication of what you should apply for. Because, in some circumstances, you may like conceivably be eligible for more than one program, and you should apply for the one that gives you the highest result, because you can only have one subsidy on the the wage side and one subsidy on the rent side in any given period.
Okay. So I guess in short terms, go through the website, see if you can figure it out through that process. If you're not able to figure it out through that process, can they call CRA and try to ask for some help?
Yeah, I think business inquiries, is business inquiry is definitely there to help out in terms of more precising the situation, I guess, their particular circumstances. So
very good. Thank you.
Great. So I'm going to ask you one that I think our counselor may have answered in the background as well, but it got a lot of votes. So Cole was asking, when talking about revenue loss, what periods are being compared? So if you could just clarify that, because I think a lot of people, it's hard to keep all the details straight. So he was asking, is it 2019 to 2021? Could you just run through that?
So generally speaking, yes. If you use the alternate method, then it would be it'd be January and February 2020 compared to 2021. So this is the this all relates to the 12-month average revenue drop. This is like a new calculation that has to be performed. If you're applying for the THRP as a qualifying tourism or hospitality entity, it's a requirement. It's not a requirement if you're trying to access THRP through the local lockdown program. And it's also a requirement if you're trying to claim the hardest hit businesses, so the HHBRP. And so I think, yeah, generally the general answer is that it's it's the average of all your revenue drops for periods 1 through 13, and then how those revenue drops are determined depends on a couple of factors, which if you'd like, I can get into it, or if you want to hold off and if like wait for that question to be asked in particular, then we can do that. But
it looks like we're showing on the screen and that might be Rachel who's pulled that up, or not sure who's pulled that up.
Oh, that's great. And sorry, I apologize. I am looking at the questions that are coming in through Q&A, so I don't have the benefit of seeing what's actually on the screen at the moment. But yeah, if you do navigate over to the web content on the 12-month average revenue drop, there's a pretty concise explanation of what it is, what it entails, how it differs from the calculation that you may have performed if you were claiming Qs in periods 1 through 13, because there are differences.
Mm-hmm. I'm going to ask a question that is kind of related to this, that came in advance of the webinar from Angelo. And the calculations can be a bit complicated and overwhelming. I understand if you're putting your data in, then some things fall out. You don't have to know in advance which program, for example, which programs you might qualify for. As you enter the information, that becomes clearer. But the calculations nonetheless feel a bit complicated and the program details confusing. And so Angelo is saying we leave a lot of it for our accountant to prepare. And I'm sure many businesses are in the same situation there with blind trust. Any recommendations to verify?
I think the only recommendation that I could possibly put forward is to actually, run through the calculator with the information that you've provided to your accountant, if it's the case that you're having an accountant prepare your claim for you. And that might provide you, some level of assurance that, it's being calculated correctly, and you can have that discussion with your tax professional if you're getting, significantly different results than what they might have determined. And I would think that it would be, the onus would be on them to explain why their calculation would be different than yours. So I think the calculator is, though, very user friendly. It does provide for lack of a better term, it provides some off ramps. Like if you're not familiar with like a particular term that's being used or a concept being used, quite often there's like an off ramp that you can, a pop up or even like a link out to, more detailed content is available through it. It is very user friendly.
Great, I think that's helpful. And I think it's just the idea that it feels a bit backwards in some ways. I think the expectation might be that you have to do your homework and know which program you're applying for and know all of that before you go into any kind of calculator. And it's actually the reverse of that, that you need to know your revenue losses and you need to know the questions that apply to your business. And once you fill that out, the calculator helps you know which programs you're eligible for and what that looks like. So I think that that's a good advice for people. Corinne, are you seeing more that from yours that you want to put forward?
Yeah, so there's one of the questions that's been upvoted a little bit from David that I thought would be a good one to ask in regards to, I guess, seasonal businesses. David talks a little bit about in December 21, they were down 20%, but December accounts for only 3% of their annual sales. They lose money in the months November to March. They need help in the off season, and the program says you need to be down year to date and in the current month. This really doesn't work for seasonal businesses, and wonders if that's been considered.
I don't know that I can really provide any like specific comments or like comments on the specific situation. When it comes to the 12-month average revenue drop, if you are if you're operating for reasons other than if you are not operating for reasons other than a public health restriction, you would exclude those periods for comparison, right? So if you're if you're not operating when you're calculating your 12-month average revenue drop, if you weren't operating in, let's say, periods 11, 12, 13, because you're a seasonal business and you're closed during that span of time, you would exclude those from the calculation. This, like at the end of the day, though, that's what's presented in the program rules. Any consideration as to why and if there's alternate options are considerations for the Department of Finance.
Okay. But just so I'm clarifying, just so I'm making sure I understood, so that the folks listening understand, is that if you are a seasonal business, you don't have to use in the 12-month calculation the months that you weren't operating as part of your 12-month. Is that correct?
Yeah, it's not even that you don't have to. It's that you are to exclude periods where you weren't operating.
As a business.
Yeah. And the only exception to that general rule there is if the reason you were not operating was because you were subject to public health restriction.
Great. Okay. Thank you.
We have a couple of questions, Corinne, on the rent subsidies. Is that where you're
just going there too?
next?
So you go ahead.
All right, so great minds. So Greg had asked in advance a more general version of the question. Are there any changes to the related party rent rules? So the non-arm's length rent rules, and his travel agent rents his office from his parents' company. But there's another one, Sandy's asking for the rent subsidy. Can a corporation apply for it if the rent that they pay is to a corporation that has a partial owner that's the same? So it's a slightly different version of the same question, but this kind of arm's length rent question. Is there anyone from CRA who could help with that?
So generally speaking, all the rules that applied to the previous rent subsidy, the Canada Emergency Rent Subsidy, with respect to non-arm's length tenants and specified tenants, when it came to the public health restriction, they all apply when claiming rent support under the THRP or the HHBRP, including that specified tenant rule. It extends through to determining whether an entity is subject to a qualifying public health restriction for the purposes of qualifying for the THRP through that local lockdown program.
So that's one of the many on the long list of things that we that we have on our list, Corinne. And I maybe just put a Mark's upvoted question to you, actually, Corinne. How are businesses that are directly affected by closures and non-event gathering restrictions able to get support if they're not the ones that have been specifically told to close? And I know you've been
Yeah. So we're certainly advocating strongly for reinstating a bit more of a generous, broader wage and rent subsidy program that would allow businesses with revenue losses, get any revenue loss in any kind of business, as it was pre-October, to still be able to access the rent subsidy on a sliding scale. So the larger your revenue loss, the larger the subsidy you would get. We continue to push for that, especially given this fourth wave we're in today. Unfortunately, the outlooks for many of our members, including I'm sure many of you, is not quite as rosy as you thought it might have been 3 or 4 months ago, when maybe making those changes made sense. But today, unfortunately, so many are in a lockdown or restricted situation. And even if they aren't, they're not getting the customers that they once did, and they're dealing with higher costs. So this is part of the advocacy we're pushing for right now, is to broaden these programs out a bit more, at least for the next few months, to help get through what has become a very challenging time.
Thanks for that. Other questions you're seeing, Corinne, that you want to put forward? Otherwise, I can continue.
You can continue. Please go ahead.
Okay. So let's see. Oh, Jocelyn's got one.
Yeah, I have one, and it's not necessarily CRA related, but I thought it could be helpful. From Corinne, you said that the CEBA deadline has been extended. There was a great question about whether the loans through the RDFs or RDAs were going to be extended. So those RRRFs has those deadlines also been extended?
Yes, they have. That was confirmed as part of the announcement. So all of that information, as soon as they've sort of finalized it, will be coming through, but it's both the RRF CEBA-like loans as well as the CEBA loan itself that have been extended.
Awesome. Thank you.
Great. Well, I might just go in order then of the upvotes here, because that's so please continue to do that for our audience, because that is very helpful. And so Eric's question is, why was period 14 chosen as a comparison for the CRHP? That was a typical month for us during the pandemic, so it's hard to bring our wages higher than that. So I don't know if there's just any insight you can provide on that, David.
So I don't, like, I can't speak specifically to why that period was chosen. That would be a question, like, it's a matter of policy. That would be better directed to finance. But I would point out that period was right around the time that the CRHP was introduced, to the public. So I think that might have something to do with it.
Great. And Adam is asking, will deeming be applied for months after and or before the reduced sales periods, just as it was earlier in the pandemic?
So the deeming rule applies when you're calculating your actual subsidy for the current period, but as you'd find on the CRA webpage for that 12-month average revenue drop, the revenue drops, so that average of your revenue drops from period 1 through 13, and I do encourage all the participants to actually review that information, because there's a lot of nuance. There's a lot of nuance to the calculation, what's how you're which revenue drops you're supposed to incorporate, and one of those nuances is that it requires the actual revenue drop for any one of those particular periods, not one that was deemed to be your revenue drop when you were claiming the Qs.
Great, and I realize time flies when you're having fun, and I just looked at the clock, so we're at time, and lots of questions. Thank you to all our participants for all of your questions. I'll just hand it over to Corinne, and maybe you, David, for a last word, and then I'll wrap us up and bring it home. So, Corinne, do you want to say anything?
Sure. I just want to thank CRA and David, as well as your colleagues, Gary and Caroline, who joined us here today. We really appreciate it, as well as a few words from Peter Fragiskatos, the Parliamentary Secretary. We know this is a very complicated program. I know CRA is willing to do what they can to help. Hopefully a little bit of that was provided to you here today. Of course, we are always available to help as well, so please don't hesitate to call CFIB, and I'm sure CRA will do the same. But again, thank you very much to David and the CRA for agreeing to do this. We really do appreciate it. And we'll talk to you next week and hopefully continue answering many of these questions.
Great. And David, any last comments?
I want to thank you and Corinne for putting this on. I'm sure it's helpful to your members. Hopefully I was able to answer any of the questions that were posed to satisfaction of the folks who did pose them. And in terms of one closing remark, I would very much encourage your participants to navigate over to the CRA web pages for the wage and rent subsidies, or the wage and rent support. With the introduction of these new programs, I shouldn't take any credit for that. The CRA, did like a complete overhaul of how the information is presented and streamlined a lot of the information to make it a lot simpler. So it's no longer, while the information is definitely there if you want to go in depth, it's no longer the case necessarily that you have to, scroll through and read, a significant amount of material before you get to, moving into the calculator, right? Like the eligibility tool is an interactive tool that really streamlines the eligibility determination, and the calculator has the calculator itself is a great tool that's been iterated by the CRA and just improved upon since it was first introduced. So.
Great. Well, thank you very much for joining us and helping to answer the questions. And we do appreciate that CRA has been very responsive to also to CFIB and the member comments that we hear and that we pass on to you, and appreciate that you're trying to make it as easy as possible, given that it is challenging, the number of different programs, the changes in the programs, the changes in the restrictions, and all of the various things that business owners are navigating right now. And with that, I'll remind our participants that we will be back for our regularly scheduled show next week. So Corinne and I will be back with a more general overview of what's happening with pandemic restrictions and supports and what's available. And so we hope you will join us for that. I don't think we've got the registration up yet, but you'll be getting that by email, I'm sure. And so hang in there. A little bit of a rocky start to 2022, but hope I'll I'll go back to those first quotes. Hope is a powerful emotion, and it's a good one, and one that Corinne often reminds me just how resilient and hopeful and optimistic business owners are. And I know it's increasingly challenging to do that, but you guys are heroes and you're doing awesome work, and we look forward to seeing you again soon. Thanks so much, everyone. With that, we'll end the webinar.